Good morning, good afternoon, or good evening, depending on where in the world you're signing in from today. Really appreciate you guys taking time out of your day to join us. I've got with me today Luke Alexander, CEO of Newcore Gold, to discuss recently announced drill results. Luke, how are you today?
Yeah, I'm doing great, and Happy New Year to you, Romeo, and Happy New Year to everybody else on the call.
Yeah, Happy New Year. I hope everybody had a great break. I know there's quite a few of you in the room. And here's how today's going to work just for everybody here. So I have some questions for Luke based on the latest release, but then I'd love to answer a couple questions from the live audience. It is a short event today. We're probably only going to be about 20 minutes or so. So try to get your questions in early, but if I don't get to them for whatever reason, please do be happy that you put them in the chat, because I'm going to send them through to the Newcore team, make sure they get them, and we'll get back to you at their earliest convenience. Only other thing I'll say is this is being recorded, and it will be available probably tomorrow morning. Just have to do some quick edits on it. It'll come right in your inbox, and it will also be available on Six's YouTube channel. That's enough of the boring stuff. Luke, I'm eager to get into the protein. Obviously, this is a great start to 2026 for Newcore, with the first set of diamond drill results from the program underway at Enchi being announced, I believe, just yesterday, pre-market. So just a high level, because I'm going to get into the details. I'd love if you could walk us through the results you announced.
Yeah, absolutely. I mean, one of the things we have been talking about for quite a while is how we're extremely excited to be getting back to some of the deeper drilling on our Enchi project. A lot of the focus of our program over the last number of years has been the near surface, shallower oxide material, but there is a big opportunity at depth. So when we look at the drill results that we put out, and maybe I'll just share a slide here if that makes sense, Romeo, just looking at some of these results that we put out yesterday, they are the first set of diamond drill results focused on the fresh mineralization on our project, and we couldn't be happier than what we received. So 174 grams over 1 meter. That's our fourth best grade meter intercept ever on the project. And I would also highlight, this hole here, 3.5 grams over 23 meters. Within that, 7 grams over 8 meters, I would argue is probably even a better hole given the width and the grades that we're seeing. As you can see, both of these holes are the deepest holes that we're seeing on these sections. And obviously, it continues to prove out that geological thesis that we've got for the project. And when we look at this set of drill results, it is only 5 holes over 1,700 meters. And that is concentrated primarily on one of these chutes that we've identified. And obviously across the project, we have a number of different chutes that we're going to be targeting. So needless to say, we're very excited to keep the diamond drill rig turning so that we can continue to chase these high-grade chutes.
Awesome. No, appreciate that high-level look. Now, I do want to kind of get into the details of what you just talked about, because I know Boyne deposit has only been tested, as I understand it, to an average vertical depth of 100 meters, with the diamond holes testing that upper fresh mineralization between 200 and 300 meters. So kind of two-part question, so bear with me. What gave your team the confidence to step out to that depth? And then what's the basis for believing Enchi can follow that same kind of geological pattern that the neighbors have? So I'm talking Newmont Sahafo and Asante's Bibiani.
Yeah, absolutely. So maybe I'll just address your first question, which is, looking at a long section of our Enchi project. So first thing that's important to highlight is that when we reference deeper holes on our project, and you'll see that in our press releases that we put out, for us at Newcore, those are deeper holes. But relative to other projects in Ghana and other projects around the world, these are still relatively shallow holes. So this drilling that we're targeting at the moment and the results that we just put out, as you highlighted, are kind of targeting that 200 to 300 meter zone. And previously, some of our deeper drilling was kind of down to 150 to 250. So still relatively shallow. When you look at this long section here of our Enchi project and we compare it to Chirano, for example, the average vertical depth of all of the drilling that we've done is down to about 100 meters. The average vertical depth of the pits that constrains our resource is only down to 80 meters. When you look at that across our project and compare it to Chirano, for example, or Ahafo, as you mentioned, Romeo, where you'll see a lot of these deposits really grow in size and increase in grade is as you start to identify these high-grade feeder zones that plunge at depth. It's important to highlight that they do not sit everywhere, But once you start to identify them, there's the opportunity to really chase them. To put that in perspective, Chirano today is mining at 800 meters below surface. They've drilled down to 1.1 to 1.2 kilometers. When we go and look now at Boeing specifically, I think this will, kind of illustrate, why we're excited about the opportunity at depth. So just to orient you, you're looking at about a 6 kilometer strike here at Boeing. These are the pits that as I mentioned, average 80 meters in depth. And then with the historical drilling that we've done, we've started to identify where these plunging chutes potentially sit on our project that compare to what we're seeing at Chirano and Ahafo, as you mentioned. And that's what's kind of given us the confidence to obviously go in here and continue to chase these structures. So we've got currently a 10-hole drill program planned here at Boeing. Obviously, we've just released 5 holes. We've got another 5 holes that are being drilled and or sitting in the assay lab. Given the success that we had with these results that we just put out, including our 4th best ever grade meter intercept, a nice big wide intercept of 3.5 grams over 23 meters. And as I mentioned, within that, a nice higher grade portion of almost 7 grams over 8 meters. We're going to want to get back in and do some follow-up drilling on that. So really, that's the confidence that we've got, is these greenstone hosted deposits. We see it with our neighbors, tend to extend at depth, and that's where you can get into some really nice high-grade zones.
Awesome. Now, obviously, this is my perspective. The drill results continue to show really high grades and substantial widths. And you touched on this, but I'm just curious your perspective. Just so the market, the folks in the room can understand a bit better, how do yesterday's results compare to what you're seeing in the shallow portions of Boyne that are already part of the resource?
Yeah, so when we look at a lot of the historical drilling that we've done on the project, as I mentioned, a lot of it has been more focused on that near surface zone, the oxide transitional zone. A lot of that is really low cost drilling that we can do on the project. So just methodically kind of stepping out and chasing these structures along strike and growing the ounces by focusing on that near surface drilling. I mean, when you look at RC drilling, which is what we use for typically the first 150 meters of drilling, that costs us about $100 a meter. When we look at ultimately some of the deeper drilling on the project, the diamond drilling, that starts to cost us $250 a meter. So there's an efficiency gain by focusing a lot on that near surface material, and it is something that we will continue to focus on. All of our deposits remain open along strike, so systematically stepping out and chasing that near surface material and growing the mineralized footprint, and over time looking to grow the global resource is something we'll continue to focus on. So that's been a lot of the focus of the initial drilling, and looking for kind of big, long, continuous mineralized zones that can that can ultimately feed the mill and can be captured within an open pit scenario. What we're now looking at by chasing some of these higher grade feeder zones with the diamond drilling is, higher grade material that can potentially deepen the pits a little bit, but also will then show the mid to long term potential of our project going underground, which is what, again, we're seeing at Chirano, at Bibiani, at Ahafo, is, those mines have moved to underground, and that's a big opportunity for us in the mid to longer term. So with this drilling and the success that we've had with yesterday's results and the success that we're expecting in the future, we're going to prove out that concept that there's a very high grade underground opportunity here that can create a lot of value for shareholders.
Awesome. And I want to talk about the whole drill campaign just for a second, because I know you got the 45,000 meter program underway right now with results for about 31,000 released to date. So my question is really, what's next? Can you give me an overview of kind of the focus of what the market can expect for the remainder of this program?
What's next, and I guess yesterday's results would be a great example of it, is pure exploration drilling. So we're extremely excited to be back to, looking to target new areas, chasing these high grade structures at depth, stepping out along strike to grow the ounces. If we look at that initial 30,000 meters of drilling that we did, yes, we did a little bit of exploration. We went back to some previously tested areas, but the bulk of that 30,000 meters was focused on resource conversion. So moving ounces from the inferred to the indicated category. One of the key reasons for us completing that drilling and focusing on that is indicated ounces are what's going to feed our PFS, which we're looking to put out middle of this year. So with that 30,000 meters, we think we've now converted the ounces that we want within the indicated category. So now we're back to the exciting part of exploration, which is ultimately making new discoveries, growing the overall size of the resource, and putting out results like we did yesterday, 174 grams over a meter. Again, that's our fourth best grade meter intercept ever. Nice big wide zone of 3.5 grams over 23 meters. High grade within that. We then hit another 2 grams over 16 meters. So that kind of pure exploration drilling is something that we're focused on with this additional 14,000 meters that will come out over the next few months. And then we can also talk about what we're going to do beyond that, with additional capital coming in. And my expectation is that we will be drilling right through 2026. And that's something we're excited about.
Oh, great. Now I know, just zooming out from all the fun, sexy drilling and exploration, I know you're also focused on advancing development eventually. So specifically in terms of study work, you mentioned target of completing the pre-feas in the first half of 2026. What work is underway right now to advance the project to PFS? Are there any opportunities to further optimize the project going forward? Are we thinking about heap leaching? Where are we at with those?
Yeah, so over the last year, and really it kicked off on the back of us completing our PEA in 2024, we started doing the infill drilling to convert those ounces. So that initial 30,000, that's now completed. But beyond that, we've been doing additional PFS level metallurgical test work, which we're starting to wrap up. We've done hydrological drilling, geotech drilling. We're now doing the testing that goes along with that. We've done additional environmental work, baseline work, so condemnation drilling. So all of that work has been happening in the background over the last year and a half, really to culminate in us commissioning our PFS and then ultimately looking to get that PFS completed at the end of H1 of this year. So all of that's been happening in the background. The other thing we kicked off kind of middle of last year, and this is really on the back of us being in a completely different gold price environment than we were when we put out our PEA in 2024. If you go and look at our PEA, and you can see it sitting on our website, we've got a dedicated presentation if you want to get into that. We used a base case of 1,850. Yes, a lot of people ask me, well, how long ago did you do that? Well, that was 2024. 1,850 is what the consultants were willing to sign off on from a gold price perspective. Needless to say, today at 3,000, let alone 4,000, $4,500 gold, we're in a completely different gold price environment. So with that, we kicked off an internal trade-off studies to look at different processing methods. How can we extract as much out of this project as possible? So we're starting to see some really interesting results coming out of that in terms of potentially introducing some CIL into the process, which would then allow us to recover more gold. When you look at a heap leach versus a CIL operation, you could potentially extract maybe another 10 or 15% through that process. So we've been doing a bunch of that trade-off work internally, really just to optimize and potentially squeeze more returns for shareholders out of this project. So a lot of that work has also been happening in the background. And again, that work will then feed into our PFS to obviously create the most robust PFS possible.
Great. And it's remarkable how many companies I work with whose PEA is gold at $1,700, $1,800, $1,900 and was perfectly economical there. So at 4,400, it's it's a good time to be in the business, basically.
Well, it's again, Romeo, every extra percent you can get out of a project at a 3,000, let alone a $4,000, $4,500 gold price environment, that can be very economic in terms of the returns for the project. So that's something, again, with this trade-off work, it's been really exciting to see where those optimizations can create potentially even more returns from our project.
Yeah, certainly exciting. I do want to talk about Newcore's cash position for a second. So I'm going to throw a couple financial questions at you in tandem. One, are you funded for the current drill program in PFS just with current cash proceeds?
Yeah, so everything I've talked about today and everything you'll see in our presentation is fully funded from the cash that we have in the bank today. So that includes the completion of our 45,000 meters of drilling, as well as our PFS. We then have an additional $10 million of warrants that are well in the money right now. So 50, 60% in the money today. Those warrants expire in the next 6 weeks. So we've started to see the money coming in from those warrants already. In terms of where those warrants are held, 5 holders own 80% of those warrants. There are large institutional holders who are very supportive of what we want to do and want to see us continue to aggressively drill across the project. So as that $10 million comes in between now and the end of February, so what's that, 6 weeks from now, obviously that will bring another 10 million in. And what I would expect is we could see us expand our drill program well beyond the current 45,000 meters. With that money, we could also start looking at some of the feasibility level work that will need to be done on the back of the PFS. So we're very well funded. We've got cash in the bank. We've got additional cash coming in, and that's obviously going to allow us to grow the overall size of the program and look to, again, with that additional capital, create even more returns for shareholders, as well as news flow. Obviously, drilling right through the end of this year. If you look at our historical kind of drill results, they typically come out every 4 to 6 weeks. So we will have lots of drill results through the end of this year. So yeah, very well funded from that perspective.
Oh, great. And obviously it sounds like a pretty busy year ahead. But I'm curious for your perspective on what do you think of the upcoming big catalysts you've got in the first half of the year? Which do you think could have the biggest or most outsized impact on share price performance?
I mean, I think yesterday would be a great example of the impact that exploration can have for Newcore and our shareholders ultimately. I mean, you look at the results we put out yesterday. Yesterday, we traded over 2 million shares. We were up strong on what was a flat to down day for precious metals companies. So I think that's an indication that as we continue to drill and as we continue to make high-grade discoveries and grow the potential for our resource, that can create additional returns for shareholders. I mean, today in the market, again, we're seeing very strong volumes, stock up again. So it's a continuation of that strong share performance and volume that we saw yesterday. And I think this really highlights that the market's excited to see drill results. So I think that'll be and continue to be a big catalyst for the company all the way through 2026. So drill results every kind of 4 to 6 weeks coming out. I mean, tomorrow we could wake up and find out that we've got another big batch of high grade intercepts, which could drive more shareholder returns. Then beyond that, obviously, commissioning of the PFS is something that we're looking to get completed as all this study work gets done. And then really another big catalyst I see is the publishing of our PFS, which we're targeting the end of H1. I mean, if you go back and look at the release of our PEA, that was a major catalyst for the company. We saw the stock move up on very strong volume as we put that out to the market and highlighted the economics of our Enchi project. As we now take it from PEA to PFS, and all of that de-risking work that has happened along that path, the market will typically and should pay a much higher multiple for a PFS stage project than a PEA stage project. So our view is that we get that PFS published, and that can be a major catalyst for the company as well. So drill results and then a PFS in the middle of this year will be the big drivers for share performance in my opinion.
Great. I got to say, I love that it's not 22, 23 anymore. Good news. Actually moves stocks. It's good to see.
Yeah.
better time, obviously. Last question for me, and then I'm going to throw it to some of the great questions from the audience over email and chat. But I just want to zoom out as much as possible for a second. What does success look like for Newcore over the next year and a half? And how do you see, just contextualize yesterday's drill results kind of fit into that story?
Yeah, so I'd say drill results will, without a doubt, can be a big driver for the company. And that's something that we're laser focused on. We got the drill rigs turning at the moment. So we're excited to continue to get results out and over time continue to grow the overall size of the resource. The PFS is a major milestone for us. On the back of that PFS, we're expecting very good economics to come out of that. That will then justify us fast tracking to get a feasibility study done and then ultimately get it to a construction decision. So, when we look at 12 months from now, PFS completed, FS is on its way. Lots of drilling has been completed, showing that kind of mid to longer term potential and resource growth for the project. And then we'll start to be looking ahead to, construction decisions, project funding. And really at that stage, the market then starts to price in, well, what does this look like as a producing mine? How do we value the cash flow that this project's going to create? So in 18 months from now, I think we'll have seen the re-rate from PEA to PFS to FS. And now all of a sudden, we're looking at funding the construction and people are starting to price in production, which then obviously has a whole nother multiple assigned to it.
Great. No, thanks for looking into the future with me. I appreciate it. A couple of quick questions from the audience that we have actually gone over already today, but I always like putting a fine point on it when they're quick questions. First, somebody wrote in and asked, when do you expect to release the PFS? PFS, I think I've mentioned it a couple times. We're looking to have that published in the middle of this year, by the end of H1 of this year. Perfect. Somebody else asked, again, been over it, just want to clarify. Somebody asked, what's timeline to production estimated right now?
So timeline to production, PFS, middle of this year. On the back of that, I would expect us to then go and commission a full feasibility study. Expect that to take 12 to 18 months. So we're now into mid to end of 2027, and then look to make a construction decision in 2028, start construction in 2028, and then you're into production in 2029.
Great. One last quick question. Wesley from the chat asks, how long is permitting in Ghana for this project in terms of years or months, or what are you looking at?
So one of the great things about Ghana is you've got a very supportive government in country. So they want to see mines built. It's Africa's largest gold producer. It's the 6th largest gold producer globally. And you've got a very motivated government. It's important for taxes. It's important for jobs. So we've been working closely with the government already. We keep them updated on the progress that we're making on our project. And the other interesting piece is if you look at Ghana as a whole, you've got 4 of the top 10 largest gold producers in the planet there, including Newmont with a significant operation, Goldfields, Anglo, Zijin, all there, and then a number of mid-caps as well. But then there's a dearth of development stage projects. And we would be one of the top 2 most advanced gold development stage projects in the country. So with that, obviously the government recognizes that supporting us, supporting our Enchi project to move it through the development path will obviously get another mine into production, which will be a real benefit for the country. So on the back of the PFS, we would look to apply for our mining lease as well as the environmental permit work, and we would expect that to take 12 to 18 months as well. But we've already started to work with the government, highlight the project that we're planning on building. Obviously, we've been doing a lot of the work in the background. So environmental work, wet season, dry season, wet season, dry season, all of this stuff is critical to then feed the permitting process.
Great. Now there's two questions. One came in over email, one came in the chat. They're basically the same, so I'll throw them to you at the same time. Somebody on email asked, do you intend to mine it yourself or sell to a regional mid-tier? And Paul asks, does this project not tick the boxes for potential acquirers? You didn't mention sale of the company as a success metric, so I'll throw it to you for that.
Yeah, so I mean, we get asked that a lot. I mean, M&A in Ghana, we've seen a lot of it. I mean, the most recent deal we saw was Zijin has come into the country and bought Newmont's non-core asset, the Achim asset. They paid $1 billion for that. I'd say as a general comment, if you look at M&A as a whole, where you typically see companies getting taken out is at that PFS, FS stage. So the project's been de-risked along the path and has ultimately become more attractive to be purchased. I mean, if you look at Osino, they got taken out at the PFS, FS level. OreCorp, full-on bidding war between Perseus and Silvercorp. Again, that was a feasibility stage project, bow wrapped around it, producing company can come in and build it. Most recently, we've had Predictive and Robex. Again, Predictive, feasibility stage, construction ready, and that is very attractive for acquirers. So one of the reasons, when I talk about a multiple re-rate as you move from PEA to PFS to FS, and along that path, a higher multiple ascribed from the market, part of it is also because M&A speculation increases and the potential of someone coming in to buy the company or the project increases as you de-risk the project. That being said, one of the real advantages we have with our project is the size and scale of the project is such that, and the capital required is such that we can bring it into production. Yes, we would bring in additional team members. Yes, we would bring in additional expertise to build out the group that's going to ultimately take it from study to production. But with the support of our major institutional investors, that's something we're confident we can do. So we're not beholden to a takeout. And I think that's very important when you're looking at companies. There are a lot of companies out there that $1 billion, $2 billion, $5 billion CapEx. A lot of that you'll see in the base metal, sector, copper porphyries, those types of projects where there's really only one outcome, and that's someone acquiring the company. For us, yes, there's going to be there is a lot of interest in our project and what we're doing, given the jurisdiction, given the profile, given the commodity price, but we're not beholden to M&A. And in some ways, we could create the most value for shareholders by taking it all the way to production.
Awesome. I appreciate that thorough answer. I got time for one more. This is one from the chat. They ask, it's a strategic question. I'm curious for your answer. Want to know if you're planning a resource update ahead of the PFS and if the deeper drilling holes are having an impact on the mine plan, for example, pulling the mill forward.
Yeah, so what we've kind of said is that we're going to put the MRE out in tandem with the PFS. There may be a scenario where we decide to put an MRE out ahead of time. I mean, one of the considerations there is it does end up costing a few $100,000 to get the consultants to do the work, to produce the report, to get that into a 43-101 state to then release to the market. Whereas if you incorporate that all within the PFS, there's some cost savings there. So we may decide to put out an MRE, but for now, our kind of guidance has been that we'll put it out at the same time as the PFS. And then the second part of your question was, around the fresh material and how does that, potentially change some of the mine sequencing and flow sheet. So I would take that back to my earlier comment, which is when we put out the PEA at a $1,850 gold price, today's environment at $4,000, $4,500, even at $3,000 is a completely different gold price environment and world than we were living in 2024. So with that, again, every additional percent of recovery that we can extract from processing, that could create a lot of returns for shareholders. So we've spent a lot of time in the last 6 months kind of looking at different trade-offs, really optimization work to create the most value from this project. So yes, with the fresh material, that's something that may make sense to look to get that additional recoveries that come with the CIL. Obviously, as we deepen the pits, as we grow the pits, as we grow the overall size of our fresh resource, again, that's something that we will look at in terms of where it makes sense to potentially, introduce a full CIL process. So it will influence things. And again, that's something in this gold price environment that we've spent a lot of time on over the last 6 months. And we're very excited about some of the results that we're seeing. And then all of that work will then feed into our PFS.
Great. One last little clarification before I head out. This is part of the Carson's question. Was this drilling, just to be specific, released yesterday, part of the PFS? Is it in the current mine plan, or is it more longer term exploration?
Yeah, I would put everything that we're kind of drilling now, including what we released yesterday, as the phase 2 portion of this drill program. So really that first 30,000 meters, the goal of that was to convert ounces into the indicated category. That's the key requirement for us to be able to publish a PFS. So that was the goal of the drilling. This incremental drilling that we're doing, I would foresee that going into future resource updates. One of the things, as a lot or most of you will know, is you really need to put a pin in at some point in terms of the drilling that you're doing. Yeah. You can't just continually be updating and updating and updating, because obviously the engineers start to build mine plans and sequencing and all the work that goes into the PFS. So a lot of this is, a little bit deeper results. So as well as just, we need to kind of draw a line in the sand as to what goes into the PFS and what doesn't. So I would view from here out as exploration that'll go into future resource updates.
Awesome. I appreciate that clarification. And generally, Luke, thanks so much for letting me grill you and the folks in the room. Really appreciate your time and the extra context for the release. Like Mal from the Newcore team put in the chat, you can always reach out for follow-up questions to info@newcoregold.com. But Luke, thanks so much. This is great.
Yeah, absolutely. And then I'd encourage anyone who's listening, if you aren't already, go and follow us on X or Facebook or LinkedIn or any of those social media platforms. Mal and Janet, who run a lot of that side for us, they put together and put out a ton of good content, and we've had great feedback from that. So so thanks, Romeo, to you and the Six team. You guys do a great job of putting these things together as well. So we'll look forward to hopefully doing more of these to keep investors updated on the progress we're making.
Looking forward to more good news ahead. Luke, thanks so much. See you soon.